Get to the market action with solid gains across the board. Joining us now is George C. of Annandale Capital founder and Anthony Zackery of Virtus Zevenbergen. Guys, welcome. George, so I'm looking at the market now, and September traditionally is a bad month for equities. But as of today, we're about halfway through the month and almost exactly where we were at the end of August. So does that mean it's going to be a rough 2 weeks, or does it mean that this market's just resilient?
Hey, John, the market just doesn't want to go down. It just is proven to be very resilient. And I think the ARM IPO today was spectacular. It's a classic supply-demand imbalance situation where there's demand for IPOs and there's very little supply. So when something as big as ARM comes out of the market and it's roughly 10 times oversubscribed and it has such a dramatic rise in the first day, that shows a lot of health in the market, and a lot of people who don't want to miss out on a year-end rally and are willing to risk that September it might be bad before they do get a year-end rally. And so far it's not. So far it's holding up quite well. Yeah,
I wonder about that small float. Just leaving tech aside for the moment, Anthony, what is the broader truth you think that has driven the market higher and kept it here? And how are you maybe using that truth to figure out what's mispriced, what you should buy?
Yeah, absolutely. And in the short term, across sectors, it's an element of expectations of what would contribute to a stock moving up or moving down. And if we could rewind the clock to the second half of last year, many people had expected some sort of recession to happen in the first half of this year, and that recession hasn't played out to those expectations. And so George mentioned the resilient consumer. We've had better than expected economic conditions, which have contributed to rising sentiment and therefore rising multiples in the market. And so we're long-term investors. We're trying to focus on what's going to happen next year, next 3 years, next 5 years, next 10 years. And we believe over time, it's going to be the fundamentals of the companies that will dictate the investment outcomes.
Interesting. And George, you mentioned ARM. The IPO we had today, I want to play a bit of sound. Here's what Masa-san, who still controls most of ARM through SoftBank, said about its future.
I believed in the future of AI, and it's really now getting proved. And this is the beginning of big AI time. And ARM is going to have a big role in that.
Okay, but ARM's bread and butter, George, is still CPUs, not GPUs, not AI systems, which I know they're trying to argue that they have a strong play in. Do you really buy it longer term as a growth play, or should investors just look at this first day pop as a smaller float thing? How are you sorting through that?
Yeah, if I were him, I'd be talking about AI over and over and over again as well, because it's white hot, it's trendy. It's a fad. Everybody's playing really hard right now. Nobody really knows how fast the growth rate is going to be on that. And he wildly overstated how the growth was going to be in the company. And it's interesting because anybody who got some stock on the IPO has done extremely well today. But he and his investors in the Vision Fund and in SoftBank really have been disappointed by their returns on ARM so far. It's been a positive return, so you can't really wink at that too hard, but he still lagged the market in ARM since he bought it 7 years ago. So it's a real different story, and I'd be promoting it like crazy if I were him too, because he needs a better return going forward to make his investors happy.
Yeah, and speaking of ARM, we're going to be talking about that a lot. If you want to figure out should investors buy the stock now that it's public or stay away, that's this week's debate in the latest installment of my On the Other Hand newsletter. You can sign up using the QR code there on your screen or go to cnbc.com/OTOH. Kind of went through that on Squawk this morning as well. Anthony, what are your filters for finding value, and how should investors think about IPOs? Because ARM, it was a big one today, but we got more coming next week. And overall, if you bought the last few IPOs, you haven't done that well.
That's right. And for ARM specifically, this is a deal that has been in the works for a while.
Just want to pause right there for a second, Anthony. Sorry, I just want to let the viewers know Adobe's numbers are out, and we are going through, and we'll bring you those in just a moment. Sorry, go ahead.
Yeah, so I'm unsurprised about the excitement over ARM. It's an important cog in the supply chain, ecosystem for chips and electronic devices. But at $60 or wherever it closed today, it's trading around 16 to 17 times forward revenue, as well as 40 plus times forward earnings per share. So that puts ARM's valuation in the ballparks of electronic design automation companies like Cadence Design or NVIDIA. So to participate at this level, investors need to believe that ARM is bigger than the smartphone processor market, that they can evolve into a cloud computing, an automotive technology provider. And for long-term investors, you have to think about what could go right when you participate in these IPOs and rather than what could go wrong, because it's that optimism around technological change, new behaviors and so forth that could dictate the success of a company like ARM.